Live on Facebook?
Yes.
Nice. Hi, everyone. Welcome. Let's settle down and let more people to come in first. Hi, how's everyone going? Feel free to comment on the chat box how you're feeling. Let's chit chat. Thank you for joining us today. Taking time off and spending your 1 hour with us. If you're watching this on Facebook, feel free to join us on our Zoom link. We've commented the Zoom link in the chat box below. But if you want to stay on Facebook, feel free. If you have any question, feel free to just comment your question at the comment section and we will answer accordingly. Hi, I'm seeing more and more people coming in. Let's see if there's any familiar faces. I see a few familiar. Hi, welcome. We will start the session in 1 more minute. I'm gonna wait for more people to come in. How's everyone doing? Let me know, comment in the chat box. How's everyone feeling? So the format today will be similar. If you have any question, feel free to just comment at the Q&A section, and then we will answer all of them accordingly. So what's going to happen is I'm going to do a quick introduction and then Mr. Locke will do his sharing session. Right. All right. Good evening, everyone, and welcome to our first episode of our new series known as Investing 101, where we talk about everything and anything related to investing. My name is Kelly, and I will be your host for today. If this is your first time tuning in our session, pitchIN is Malaysia's leading equity crowdfunding platform, also a registered market operator known as RMO with the Securities Commission of Malaysia. pitchIN Equity has successfully helped startups collectively raise more than 100 million ringgit today. The most among all ECF platforms in Malaysia. Equity crowdfunding gives investors the opportunity to invest in fast-growing companies that have high potential for growth, where the public retail investor can invest alongside angel and sophisticated investor. For more information and to find out how you can invest, head over to www.equity.pitchin.my. So today with me here, we have Mr. Locke. Mr. Locke is a qualified lawyer for Malaysia and Singapore and a registered patent, trademark, and industrial design agent for Malaysia. He has been actively involved in the intellectual property field for the past 20 years. He was awarded the world's top 1,000 patent practitioner by IAM magazine for the year 2013 to 2021. And IP Star Award for managing IP magazine for year 2019 to 2021. Mr. Locke holds a Master of Laws degree from University of Cambridge, United Kingdom, an Executive MBA degree from INSEAD, France, Singapore, and EMBA from Tsinghua University, China. Mr. Locke is the managing partner of Pintas IP Group, a regional professional firm with operational offices based in Singapore, Malaysia, Brunei, and customer service offices in China and USA. PIPG provides integrated IP filing and consulting works covering Southeast Asia countries. He's also the founding partners of Global IP Southeast Asia Private Limited, an IP agency and consultancy boutique firm focusing on Japan and Southeast Asia region. Apart from IP agency and consulting work, Mr. Locke is also actively involved in angel capital investment in IP-based company in Malaysia, Singapore, and China. Currently, Mr. Locke is the Secretary of ASEAN Business Angels Council, Malaysian Business Angel Network, AMBAN. Mr. Locke is a general partner of IPO Capital LLP, a VCMC licensed by Security Commission of Malaysia. Wow, that is a lot. So ladies and gentlemen, let's welcome Mr. Locke, and I bet you can't wait to learn from him. Mr. Locke, the floor is yours.
Yeah, thank you very much, Kelly, for the introduction. I feel a bit shy right now. I gave you too long a resume, I guess. Yeah, okay. I think today, first of all, I would like to thank pitchIN for inviting us. Today, I'm representing AMBAN and IPO Angels to talk a little bit about angel investment in Malaysia, particularly, and also some of the tips, in doing angel investment. And I guess equity crowdfunding is quite related to angel investment. It's just that, equity crowdfunding, probably you have more people investing at the same time. But for angel investment, we only open up to the so-called the accredited investors, right? So I think that's different. But the investor in the equity crowdfunding platform like pitchIN will also be looking at, what are the things that you need to look at when you want to do investment, what are the valuation and all that. So today we will talk about that, right? So allow me to share my my screen. Oh, sorry, allow me to share my screen. I'm still not sharing, right? Yeah, can you see my screen?
Yes.
Okay, good. Oh, sorry, I need to go back to the first slide. Yeah, I'm going full screen right now. I hope that today's session will be a very interactive one. You can stop me, right? If you have any questions, or Kelly, you can just stop me if you want any elaboration from me about the angel investment, about angel tax incentive, about all relating to all information relating to angel investment in Malaysia and MBAN. Okay, I would like to start probably, by sharing with the audience a little bit about angel investment. Right? Kelly has introduced about me just now. I've been actively involved in angel investment for the past 10 years. In fact, we run a club for IP owners called IPO Angels. And when the government wants to set up a governing body for angel investment in Malaysia, so in the form of Malaysian Business Angel Network or NBAN, they invited IPO to be one of the founding members of NBAN. So a few of us all grouped together and we formed NBAN. And through NBAN, we lobby to the government for some tax incentive for angel investment in Malaysia. I'm going to share about the tax incentive later on. Okay, just a bit of sharing about angel investors. By angel investors, we actually refer to high net worth individual who invest in his personal capacity. This high net worth individual would have some disposable income, and they would like to bet on the startup or early stage businesses in exchange for some equity. Usually, angel investments will bring to the table not only money, but also knowledge, experience, and network. I guess startup and early stage company would need to have a lot of support for them to scale up their business, to be sustainable and to grow their business. So what we hope to bring to the table is we would like to also bring in our connection and also experience to guide the startup companies and the early stage companies. The angel investors will work in a group. Usually we form a club so that we can co-invest together, and we look at tech and non-tech companies also, right? It depends on the individual clubs. As for us, IPO, we focus on tech companies only because we are looking at companies with good IP. So usually the companies with good IPs are usually technology-based company. So a little bit on the sharing about, when does angel investors invest? Angel investor invest typically at the early stage, where it is at the seed stage where, the business is still cash flow negative. You still need external funding to cover the operational costs, right? This is the stage where we call it the valley of death. This is the stage where, startup have an idea, they put together a team, they want to move out to the market, so they need funding to do operation, they to run the operation, they need funding to prepare the prototype, they need funding to do marketing, but the cash that you generate from the business is still not enough to cover the operational costs. So you need funding externally to prolong the runway. With the emergence of equity crowdfunding platform like pitchIN, the startup and the early stage company have additional sources of funding. In the past, when we started angel clubs in the early 2000s, there wasn't any ECF platform. So the only way these startup companies can get funding is actually to go to their family and friends, right? To borrow money from people they know. And if those sources are exhausted, then they probably can look for some business angels. And we thought that, you know, it is good that we group together, right, to identify, you know, to pool together resources, and then to evaluate companies in a more systematic way, where we can invest and then come up with a structure. So during that time, you know, we went through a lot of trial and error. And when we formed the Angels Malaysian Business Angels Network, we actually learn. You know, we send our executive director to UK to learn from the UK, the London Business Angel. So they give us a lot of guidance, and then we learn along the way to do our pitching. And now, you know, the government also, you know, would like the more people to invest, and then they have they license out the equity crowdfunding platform like pitchIN, and pitchIN has done a marvelous job, you know, raising fund for the early stage company. Usually, company at the early stage when they are cash flow negative, it's impossible, virtually impossible to get backing from the bank. Like that financing is totally out. The only way is, you know, equity financing from the angels. Now with pitchIN, and maybe some grant from creators. That's where the startup can get funded, right? So this is when the angels comes in. And why, you know, why we want to do angel investment? I think everybody in the crowd would agree with me that, you know, the world is changing. The pace of technological change is unprecedented, and it's been accelerated by COVID. Right now, with COVID, everything has to change. Now we talk to you through, you know, Zoom, right? We don't have to gather together in a hall, and, you know, we can interact with anyone, anywhere, digitally, right? Though these are all enabled by technological changes, and these technological changes is the pace is accelerating, and driving this change are the change is happening everywhere, right? It is in the manufacturing. We have e-commerce replacing the traditional retail. We have the Grab car replacing the taxi. We have the Airbnb replacing the sorry. We have the Airbnb, you know, taking over some market share from the hotels. So it's affecting all sectors. So, you know, what we see today will not be the same next year or 3 years later. So all these technological changes, they are being led by entrepreneurs, by the startup, right? The entrepreneurs are at the forefront of this change, and the entrepreneurs, they need funding, and as angel investors and as investors in the equity crowdfunding platforms like pitchIN, you have to have an opportunity. We have an opportunity to be part of the change, right? We can participate in the change by investing in this agent of change. The entrepreneurs are leading the change, and as angel investors, as investor in the equity crowdfunding, we have a chance to participate in the change. So, you know, I always like to use the Amazon case studies, you know, to share, you know, with the investor in the startup, the potential upside in investing, in betting in the right horse at the early stage, right? If you look at the financial chronology of Amazon, Amazon was founded by Jeff Bezos in 1994. At that time, the price per share is 0.01 cent, right? 20 years later, now in 2020, the market valuation of the company has exceeded $1 trillion, right? So all this happened within these 20 years. At the advent of internet, you know, these entrepreneurs saw the opportunity to move businesses online, to move to move commerce online, and he formed this game-changing company. And if you can participate early as an angel investor, you know, you look at the share, the value of the share in August 1995 when Amazon needed fund to expand the operation. He went out to the angel investor. He sold the share at 12 cents per share, right? And then to extend the runway, he opened up another round of funding for the angel to syndicate of angels to come in at the 33 cents per share. And then as the companies grow and the business gain more traction, they went to the venture capitalists and eventually IPO. And now Amazon is one of the biggest company now in the world. So if you came in as an angel investor, if I can share the screen, if you came in as an angel investor, the first 20 or so angel investor put in about 50,000 each in Amazon. Collectively hold 1% share in Amazon.com. Today, each investment, the 50,000 invested in Amazon would be now worth around $6 billion US, right? That's 120,000 times return. So as angel investor and also as investor in the equity crowdfunding platform, these are the unicorn that we are looking at, right? We are hoping that one day we can put the money right, betting in the right horse, and they can grow fast and grow big one day, and there will be capital gain in our investment. This is what we are hoping for. So this is one case studies of potential upside that angel investors can gain investing in the right startup company at the early stage. So as angel investors, I think as equity crowdfunding platform investors, you will be asking the questions, what do we look for, right, when we want to invest? So what are the criteria for investment, right? Based on our 10 years of experience, I can share with you what we look for when we invest in early startup. Because early startup, they are still at the very early stage. We don't have much of a track record to look at, right? So we need to actually bet on certain characteristics. So there are three things that we actually look at in the as an angel investors. The first thing that we look at is actually the management team. We place a lot of emphasis on the management team, whether they are able, they have a track record of delivering results, right? We want to see what they have done before and whether they are able to carry out what they promise to the investors, whether they have the necessary passion in them, whether they operate as a team. Usually, we prefer to have a team where you have, someone who is aggressively going out, to gain the business, and the another person at the back end making sure the operation is intact. If you look, you have the yin and the yang team, right? That's quite important. So we actually scrutinize the team, and of course, apart from the team, we also look at the business itself, right? It is in the business of high growth, whether the technology is highly scalable, whether it is able to command high gross margin, and for IPO, we actually look at the quality of the IP, intellectual property owned by the company. Yeah, this is actually one of our criteria. So we actually look at the portfolio of IP asset. We very much, for our IPO team, we very much like the deep tech company that has a lot of potential to disrupt the existing technology, and then if we can, sometimes we might have to bring in some external member to come in, and with that probably we can grow the business to the level we want.
Yeah. So Mr. Lau, speaking to about the management team, how much of an emphasis is placed in terms of their university background, right? Like when you say the team, what does it consist of? Is it their background? Is it their working history? Is it their university? What do you look for?
We don't really look at the qualification, academic qualification. We actually look at, you know, whether the person has got a history of making things happen, right? So if you have run a business successfully or you exceeded before, we like that kind of entrepreneur, because the entrepreneur has delivered. You know, they are able to carry out their plan successfully. They are not the type that will give up easily, right? Because at this stage, what they have is a set of plan. Whether, you know, you can make the plan into reality will very much depends on your implementation power, right? But of course, if you are looking at the deep tech companies, right? So we would like to also look at your credential, right? What you are developing something very deep tech. So probably your technical qualification might come in handy, right? It all depends. If you are investing into a company that is very much a business innovation, right? There's no technological innovation, then probably you want to look at, you know, their passion and also their ability to deliver. Right?
So we have one question from Wei Hao, right? How do you gauge the characteristic of the management? Because, you know, when everyone pitch, you know, they can copy that confidence, they can copy, you know, how the Steve Jobs pitch, but in reality, what other characteristic do you look for? Aside from just their track record, right?
Yeah, it's very hard, right? So you would like to
Is this a first impression thing? Like the first impression that you get?
I don't think so. I think you would like to check on, you know, the person through the referees and all that, whether what kind of person he is. It's like, you know, yeah, sometimes you might have this sixth sense that this person is able to deliver, right? What he promised.
Right.
It's hard to say. It's hard to say, but it's based on, sometimes, you know, you want to check with the referee. Sometimes you might want to look at the track record. Sometimes you may want to.
Do you always do a reference check, or is it just sometimes you feel like, okay?
I do.
So we have to answer your question, maybe do some reference check, ask people they've worked with before, hey, how is it like working with them? What is their characteristic, right?
Yeah.
Okay, sounds good. I hope they answer your questions, Wei Hao.
Yeah, I think this is $1 million question, right? The same like when you get in a staff, right? How do you know? You need to observe. You need to see the result, right?
Do we have to pay a lot of school fees for this?
Definitely, yeah, because this is a early stage company,
right?
And you know, it's the person that make things happen, right? If he comes up with a business plan and this business plan doesn't work, that person will be able to turn it around. I can share an example with you. You know, I know of this team. They are doing online event. So with the COVID, they are doing offline event, right? Something like running the marathon, you know, doing this physical event. And when the COVID hit, you know, the entrepreneur would have to think of a way to make it online and not to give it up, right? So he has to innovate to move.
Just get it done.
Yeah, you can do marathon at your home, and then, you know, people still running and win award in a confined space rather than going out and do the race. So this style of people will make it happen, because they would have to deliver. This is a promise they make to themselves and also to the investors. But that's the most important quality in the startup companies.
Okay.
We also look at the deal itself, valuation. Yeah, I think valuation is important in the sense that, you know, every figures proposed by the companies has to be justified, right? You cannot be a figure plucked from the sky. And then, you know, there's a lot of courses going on about evaluation of startup companies. All these are very subjective, right? At the end of the day, it boils down to whether, as an investor, you buy it or not, right? Whether you buy that figure or not. I don't know how pitchIN does valuation. Yeah,
we have an agency that does it.
Yeah, Yeah, I think pitchIN also do a fundraising
Mm,
in the equity crowdfunding before,
mhm.
and I think the founders managed to convince, right? I think you value yourself at many times the PE, but the founder managed to convince the investor. Look at my track record, right?
Mm.
I'm the largest now in town. So you have to look at my past to believe that I can deliver what I promise. And this valuation is based on how many times of PE.
Mm.
So you have to buy it. Yeah.
Do
If
you
you
have
don't,
any tips and tricks for the audience on the floor, especially as retail investor or, wanting to be an angel investor? How do you know they're conning you? Is it, do you use the method where, the projection of it, or do you use their revenue to predict? But most of them are, seed startup, right? So uh, how do you even, rather than them justifying, what is the calculation that you can have internally, or is there a brief way that you can calculate and say, okay, this makes sense?
uh, yeah, I don't have a very structured way. It's very much on our interview, our talking, our question, whether they are consistent and all that
Yeah,
to try to find out whether it can be trusted or not. It's based
right.
on you trusting whether they can deliver,
I
right?
see.
Yeah.
Okay.
So very subjective. Whether I trust someone is based on,
And I noticed that sometimes when, let's say, like the marketplace is so hot right now, their valuation will somewhat increase a little bit higher than it should be because there is demand, right? Does it happen a lot?
yeah, it can happen sometimes. Certain sectors, they are the hottest industry to be in.
Mm-hmm.
So valuation can go very very high,
Mm-hmm.
but it fluctuates, right?
Right.
So it does happen, just like our share market. It's very much mirror our share market. Today, what is the hottest now in the share market? Probably, the glove has come down. Then the next will be coming up, will be another industry, maybe the semicon. So it comes up and down. The same applies to the startup scene, right? Where maybe now it might be something related to the healthcare. The healthcare is very hot right now, but after COVID, what will be next, right?
So
So
would you suggest the audience to think a step forward, before their valuation goes crazy? They're like, okay, let's start looking at
yeah,
companies that will make sense in 2 years.
if you can identify what is the next wave,
Mm.
the next big thing, and you invest before the next big thing, that would be the best, right?
So what
So
do you think will be the next big thing, Mr. Lok?
I really don't
Is
know.
it tourism? just
But
just kidding.
we always believe that digitalization.
Mm.
Uh, we always believe the big data, AI, is going to drive the world post-COVID, right? As we all can see, people will be moving from the physical to the digital world.
Mhm.
So all this will be, I believe the next big thing.
Okay.
Yeah. So these are the three, I think, general things that we look at. The team, the IP for us, IP is important, and the valuation. And we also have angel tax incentive, right? Angel tax incentive that we can introduce to you afterwards, where you can limit your downside, the downside risk, meaning whatever you invest, you can claim as a tax benefit, right? You can deduct from your taxable income. So people will feel that, okay, because this is a bet, right? You invest, the chances of succeeding is probably 1 in 10. That in the world of VC, the world of angel, you cannot hope to have 100% return. The most is probably 10, 20%. Make it, then you will consider good already, because it's a lot of unknown at the early stage, a very high risk, and hopefully, by selecting the right one, we can make the return from the one or two that is successful. So the angel tax incentive, and I believe the ECF, the government has also a similar tax incentive, right, for people who invest. So this is good for people to invest, and due diligence is very important. Yeah, we can never uh, place enough emphasis on due diligence.
So we have a question related to due diligence. It's by Wei Ho. What kind of due diligence do you usually do to validate the valuation?
Oh, what we do in our group, right? The IPO group is we usually have a champion because our investor come from across the board of the industry. They are people in the manufacturing, people in the IT, people in the banking. So we would have someone who know the industry a little bit better to champion the case, right? And the champion will probably go into the all these proposal or the numbers proposed by the investee company, right, by the entrepreneur, and try to validate and see whether this is something achievable, doable, what you say makes sense to someone who is in the industry or not. This is what we do in our due diligence. If the person who is in the industry for 20 years say this is not possible, then the outsider will probably not go in. But that has a downside also, because the person who is in the industry might be living in a box, right? He's not thinking outside the box. So we also miss some good deals, right? We have a very good, very experienced banker in our group. So he championed a case from Philippines doing the salary back P2P lending, right? Salary back lending, and he coming from a bank say, yeah, this projection is too optimistic, so don't invest. At that time when he came to us, the valuation was 1 million, right? 3 years later, valuation went to 70 million. We were advised not to invest. Everybody was so excited, but he said, don't, this is not doable. So we missed the boat. So it happens that way when you are too conservative. There's no hard and fast rule, right? It's all depends on luck sometimes. Yeah.
So would you say that if we were to copy or look at our neighboring country like Singapore or Philippines, there is somewhat of resemblance?
I don't know what you mean by that.
So let's say we have let's say like you said, P2P lending, right? Payday loan is big in Philippines, but not yet in Malaysia. But what if a company wants to do that? Do we benchmark the success of Philippines and add it as a factor into the valuation of the startup?
Yeah, you can refer that, because when we do valuation, right, one of the way of valuation is the market approach. So we may look at the valuation in Philippines for a similar startup and look at us here as a market approach, market comparison on the valuation. So why not, right?
Okay.
Yeah. So let me just move on, right? I think, I just want to share some statistics, right, that we gather throughout the year about what makes a successful angel investment. So one of the sharing I can I can share here is I think it is angel investment is a very high risk business. So we usually would advocate having a portfolio, right, rather than putting all your egg into one basket. So statistics or studies shows that if we have a portfolio, the chances of having a return or not losing money is higher if we have a portfolio. And this number, the statistic in I think done in UK, show that if you invest in 20 company, you have 20 in your portfolio, chances of you having 100%, it is almost certain that you will not lose money if you have 20 in your portfolio, right? This is actually shared by some studies done in the UK. I guess this can be similarly applied to equity crowdfunding. Yeah, so if you want to diversify your risk, you probably want to have a portfolio of investment rather than you bet in one horse, hoping that that horse will be, will give you a home run, right? So this is one of the things that we look at, diversification through a portfolio. The other thing is, like what I mentioned just now, due diligence is very important. This study was done by the London's Angels Club, and it shows that, you know, if you do more than 20 hours of due diligence on what you want to invest in, the chances of you getting 10 to 30x return is higher. You know, yeah, this is, if you look at the statistic, 30 times return, 10 to 30 times return is higher when you have a lot of due diligence. So due diligence is very important. You cannot just say that, oh, this company looks good and okay, just, you know, the founder, you know, you like the founder, so you just invest. You need to do a due diligence. And how we did our due diligence is we have a champion with industrial experience spearheading the due diligence process. The next thing is industrial experience affecting outcome. So I guess if you are in the industry, you probably know the water, how deep the water is, right, for you. Because from the outside, you probably would need some time to learn the industry, the so-called the market forces. So if you're in the industry, probably you would appreciate it better. So what we did in our club is we have champion from that industry to champion a case relating to their industry. So this is how we do. And industrial experience actually play a part. Or you invest in space that you are familiar with, right? Chances of you not going wrong will be probably higher than if you invest in a totally new area and you don't have much info. That's the reason why we like to invest in a group. In a club, we have people from different background, so we rely on each other's expertise to guide us in investing. So when the champion say go, we will just follow him because the champion has experience in the space, right? So it cuts down our time of doing do too much work, and it's impossible to have 20 in your portfolio if you want to invest, you know, and know everything, right? So you let people to specialize in certain industry to work together, right? So another sharing is, yeah, I think studies also show that if you are in the board, right? If in angel investors, when we invest, we usually send someone to the board. So the board person can monitor the development of the company, right? So we have more info and you know, we have regular meetings also with this board involvement. But as a equity crowdfunding platform, I don't think you can sit in the board, right? But what pitchIN has done is probably do a regular reporting of the states of your investment, right? So you will know what is happening. Yeah.
That is correct. We do annual reporting in every company you invest on pitchIN.
Yeah, that's very important. And also be a partner, right? As an angel investor, we like to look at ourselves as a partner to the companies that we invest in because our interests are all aligned. If you succeed, we succeed. If you fail, then all the investment will be burned, right? And at the early stage, chances of your investment going bust is very, very high. So it is good that, you know, you can help the companies to grow and to you know, to be sustainable. So these are the 3 rules that we always look at, you know. And when we invest in a startup, we have to make sure that they don't run out of money because they are startup at the stage of angel investment are still cash flow negative. So if they run out of the money, you have to cut down or shut down the company. So whatever investment you put in will be down the drain. So nothing is left, right? So not letting them run out of company. Sometimes you may have to come in to help to raise more funding. Sometimes, you know, you may have to give some loan to make sure that they continue the runway. The other thing is execution, right? Execution is very important because, you know, it's easy to come up with a business plan, but executing it well is not easy at all.
Which is why the team is important, right?
Team is important, and the person running the show is the most important person. You know, I shared the example of this company that runs event. When you have COVID, they have 2 choices. They have to shut down the company and burn everything, or they have to innovate to make it into an online event company, and they continue to operate, right? This shows that the founder is someone that makes things happen. He doesn't give up easily, right? You can change the business model, make it continue the operation. That's very important.
So one question from the floor. What is a reasonable time frame to expect a return of your investment when we invest in startups?
Angel investment is also known as patient capital. Patient, you have to be patient. So we did a studies on the holding period, and we found out that usually we have to hold for about 5 years before we start thinking about exiting, right? 5 years is the median, the standard holding period for angel investment in Malaysia, based on the studies that we have done.
Okay, one question related to MBAN. When a new startup is in the valley of death zone, sometimes asking for the startup to get an IP, the process and cost can be exorbitant. Is this a prerequisite for MBAN?
Can you just repeat?
So when a startup is in the valley of death zone, sometimes the startup are asked to get an IP. The process is expensive and costly, right? Is this a prerequisite for MBAN, or at least IPO?
Usually we will invest with some IP already in place. They may get the IP from some grant money, some spin-off from the university. They have already completed the research, so they have the IP registered already, usually. But during this, along the way, they might have some new IP. So if this IP is critical, right, we would advise them to also protect it, because that's the only asset you have, right, with this IP. Because we are looking at deep tech. So with this IP, you can have barrier of entry, you can have like freedom to operate. So we need this IP in place. So for us, it is important, but for certain other clubs, they probably not look so much into the IP, right? So we usually can tap into some grant available. Cradle have some grant, Mossy have some grant. So we would want to use the grant money from the government, because at that early stage, the government has to help, right, to protect those IP. So the grant might come into handy in a situation like this.
Okay, thank you. So I know a lot of people are asking, in terms of ROI, maybe you can share some of yours or your club's experience. So a lot of the audience are interested in terms of what is the average ROI, right? So let's say I invest in a company, hypothetically, and then next year they say, okay, I'm offering you an exit at 3x. Do I hold, or do I say, okay, time to go because 3x is good enough? What would you recommend? What is a good number?
So when we invest in the startup, I think usually we look at about maybe 10 to 20x return, right? That's what we look at least what my club is looking at.
Okay.
10 to 20x. Why? Because many will falter, only a few will survive. So that 10 to 20x, you average down, probably you have 3 to 5x return, right? So yeah, I think if you can have, depending on your investment period, if you feel that 3x is good for that amount that you put in, why not, right? There's no hard and fast rule, but in average, the target returns that we look at in Malaysia, based on the statistics, majority of the investors are looking at 10 to 20x for the investment they make in the early stage company. That is backed by the research that we have done, interviewing about 100 over angel investors. This was a project undertaken by NBAN 2 years ago, and we have some statistics that we can share with you.
Okay. So there's another question. I think this is more related to not angel investor, but and maybe as you mentioned that investor would like to be considered as partners and not investors. But let's say we are only a retail investor and we cannot be part of it. What do you think? What is your opinion and what we can do into consideration of the company?
Yeah, I guess as a retail investors, you're probably not in a position, right, to influence the.
Yeah, it's so tiny, you know.
Yeah, I guess you can. Yeah,
I can input here.
yeah,
What
yeah,
you can do as a retail investor is, promote it to your friends and tell them about the product. Make sure
yeah,
the business survive. And you yourself as an investor, you should be proud and loud and be like, hi,
yeah.
let's say if you invest in pitchIN, you're like, yes, I invest in pitchIN. You come to me and say, Kelly, I'm your investor and I have some idea. And,
Yeah.
we'll be more
Yeah.
than happy to chat.
Yeah. I think I'm a retail investor in pitchIN also, right?
Yes, Mr.
So,
Low is also our investor.
yeah, as a small retail investor. But
Yes.
I think, we always want pitchIN to do well, right? So when there's any opportunity, we will share with pitchIN, hey, pitchIN, would you want to work with this Canadian group? So that's what I did, right? So
Yes.
the way you can help. Yeah.
Yeah. So, even on ECF or even as a retail investor, if you think there's something that could benefit the company, always feel free to reach out to the management team. I'm sure they will take into consideration.
Yeah. Any help will be good, right? At the early stage.
Yes, correct.
Yeah. So a bit of promotion for at Malaysian Business Angels Network. I come here today to represent. I hope we can have more angel investors joining us. And just a bit of introduction of Malaysian Business Angels Network. It was formed in 2012, 2013, right? And it was formed, it was actually one of the part of the effort by the Malaysian government to grow angel investing in Malaysia. So they want all the clubs to come together, and the government can propose some tax incentive to members of this club, right? We are kind of like the face for the angel investment clubs in Malaysia. So it comprises of many angels clubs coming together. We have, I think, 7 or 8 clubs right now, and we are welcoming more clubs to join us, right? And then and as part of the deal with the government is, if you want to claim the angel tax incentive, you have to be a member of Malaysian Business Angels Network, or you can be a member of the clubs that is associated to Malaysian Business Angels Network, and members of the club automatically will become member of MBAN and also enjoy the tax incentive. So if you are a member of IPO, you can also be a member of MBAN at the same time, and you can enjoy the tax incentive. So different clubs have different charter, different objective, right? So some clubs are very interested in maybe certain agenda. For us, is on IP business, right? So you can come in directly to be a member of NBAN and start participating and learn about angel investment in Malaysia, or you can join through one of the affiliate clubs, right, of under the NBAN group. So we have been around for the past, I would say, close to 8 years, yeah, and we do a lot of educational program like workshop. You can join any of our workshop. We have a deep dive workshop, 2 days deep dive workshop, where in the workshop you learn about the A to Z of angel investment, including the term sheet, all the legal documentation. There's a module on valuation, yeah, and there's also a module about evaluation of companies, right? Sharing of experience, or we have a half-day workshop, right? We do a lot of that, almost monthly. And we also have a deal flow monthly pitching. We call it the Enter the Tiger's Flyer, ETTL, where we do it every last Friday of the month between 3 to 5 p.m. You can come and see the program or the deal flow that we curate for our members. And at the clubs level, at IPO clubs member level, we also do our own pitching every quarterly. So so there's many deal flow coming to the club, so you can see. And we also invite many of the companies that raise their fund through the ECF platform to pitch through our angels pitching session. And the other thing that we are doing now is to engage with the public sector, the government, trying to lobby for more tax incentive for angel. right? We have managed to extend the current angel tax incentive to 2023. What we are doing right now is to try to convince the government to come up with the corporate angel tax incentive, right? So corporate angels, we can treat corporate as an angels investors. So hopefully something will happen. We also do regional connectivities, right? Regional connectivity, because we know that Malaysia is just one small entity in ASEAN. So we created this ASEAN Angels Alliance, of which I'm actually very active in. So so far we have 5 countries in our ASEAN Angels Alliance. We have Malaysia, we have Singapore, we have Vietnam, we have Thailand, and also Philippines in this ASEAN Angels Alliance. This under ASEAN Angel Alliance is actually incorporated in Singapore. It is a company limited by guarantee based in Singapore. So by becoming a member of NBAN, you can also access to our regional deal flow, right? You can have pitching coming from Vietnam, pitching coming from Thailand, and also our club, our entrepreneur can also pitch to the company outside Malaysia, or investors outside Malaysia. Yep. So these are
sorry. Yeah. I would like to remind the floors that we have 10 more minutes to this session. So if you have any Q&A, any question, please feel free to drop into the chat box and we will answer accordingly.
Okay.
So one question from Mr. Wei Ho is that what is the criteria to join IPO as a member?
Oh yeah. In order to be a member of NBAN or any of the clubs, right? You have to be accredited. You have to be. Let me just share a bit on that. In my following slides. Yeah, to be accredited, right? To be an angel investors, and you want to be accredited for this angel tax incentive, right? Usually, okay, I think this is a slide. You have to have a certain criteria to fulfill. Like, for example, you must be a high net worth earner, making about 180,000 a year, and also you have high net worth individual with asset of 3 million and above, and a tax resident in Malaysia. The reason why the government imposed this criteria is angel investment is a high risk activities, right? So the government doesn't want you to, burn your life saving, right? You must have some basic asset to, so probably you diversify some of your investment into these high risk activities. Just like venture capital, if you want to invest in ventures capitals fund, you have to be a sophisticated investor. So this is a criteria that you have to fulfill. And then you have a passion in angel investors, angel investment. You are always welcome. Currently, we have about as a group, we have about 300 over members, right? We are expanding our membership. We hope more people can join us. 90% of angel investors are from KL area, Selangor area, in the Klang Valley. We hope that there are more outside investors coming in and join us. So yeah, you can join us as a member if you fulfill the criteria. Anytime you can get in touch with us. And if you want to be one of the subgroup, you can also contact the individual group to come in and join us through the group, through the individual clubs, and become a member of NBAN indirectly. That is also a possibility.
So let's take 2 more questions.
Yeah.
One is sorry.
We can do Q&A now, right? I open up to the floor. I guess because of the time, I don't want to drag you too long. Yeah, we can just take Q&A.
So this is angel investor related, right? How does angel investor exit the investment? Second part, when we join NBAN as angel investor, do we invest as individual or a group? Can individual exit an investment on their own?
Okay. Yeah. You can exit on your own. You can exit on your own because angel investor is different from venture capital. There are also early stage venture capital, but venture capital will manage the fund on your behalf, and usually you let the fund manager decide. But in angel investment, once you invest in, you are a shareholder, right? In your own right. So you can exit if you feel that you have someone, some good investor wanting to buy your share. But usually your rights is also subjected to the shareholders agreement, right? Sometimes when you invest, you have to sign a shareholders agreement. The shareholder agreement have terms like, you need to sell back first to the owner. This is called the right of first right of first, you have to sell back to the existing shareholder before you can sell to outsider. Sometimes you have the tag along rights, you have the drag along rights. You have to subject yourself to that agreement. So if you can fulfill the conditions set in the agreement, you can sell your share. Okay. And how do we exit? There are multiple ways of exiting. The most common way is, a second round funders come in, like a VC, they would like to buy out all the early stage, the early angel investor. So you sell out your share to the subsequent round of investor. If you are lucky, you can hold your share up to the point that the company may go public. You can sell your share in the open market. Or sometimes the founder would want to buy back. They have an agreement with you to say that, okay, after certain years, I can buy back from you. So these are the different ways that you can exit, right?
Sorry, I noticed there's a lot of questions regarding this, so I'm going to summarize it all, okay? Mr. Lok, so let's say I'm on pitchIN right now and I see a company that's looking to raise fund. What should I do before I invest? What would you advise me to look at? Because
you see a company that is in pitchIN now, what do you want to look at, right?
Yeah.
I guess you look at the three things, right? You look at the member, you look at the team, right? Whether this guy has sufficient track record to make the plan a success or not. Can he deliver? I think the human factor is very important. Secondly, you would like to look at the business itself. You want to see whether this business has a high chance of scaling up, right? It has a good margin. It has a very good growth potential. And we like the deep tech companies because deep tech companies have certain barrier of entry. People cannot easily copy, right? When you have a good patent, then if people want to copy, you can stop the competitors. These are the business and also the founders. And definitely you would like to look at the valuation, whether the value is something attractive to you. You look at the future growth. Will the company be growing fast enough to make your valuation look cheap, right? So these are the things that you look at. I think it's the same as when you invest into company. It's just when we do angel investment. It's just that when we do angel investment, probably we have more chance to do due diligence. We can actually look into the books. We can actually go deeper into the company to drag out, a lot of details. But as a equity crowdfunding investor, I'm not sure whether you are in a position to interview the founders to get so much detail about the ventures or the business.
Yeah. We have a pitchIN Thursday where we invite companies that are raising money to speak to the audience. And so audience are free to ask any questions to them.
Yeah, it's like a roadshow that you do, right?
Yeah.
Yeah. So I guess the same principle. You look at the track, you look at the horse, you look at the jockey. These are the three things you look at. It's the different level of detailness, right? In our case, we can be more detailed, but as a retail investor, probably you can't.
Catherine Ree, you rose your hand. Would you like to speak? You have a question for us? I'll allow you. Oh, she removed it. Okay. Let's take two more questions. First question: what is the cost of joining MBAN?
Okay. The cost is 800 ringgit as a membership fee for 2 years. So you can come in, and if you belongs to a club, it's the same. You also pay 800, but 400 will go to the club, and the 400 will go to embed. That is an agreement that we have. So the fee is the same, irrespective of whether you join directly or you join through a club. And it lasts for 2 years. The membership fees of $800 or ringgit is for 2 years of membership.
Thank you. Let's take one last question. What is the average amount that angel investor invests in a startup?
Okay, we do a studies, right? And we find that maybe I can share the slides with you. Yeah, I have these slides prepared for you to answer these questions. So you asked me how much is the average investment. According to the studies that we have conducted together with Cradles and Asian Financial Institute, we found that in Malaysia, the median value of investment is at about 200,000 per deal that we do, right? So averagely 200,000, but yeah, I guess I will agree. I will agree with this. This is looking at per investor, about 150 to 200,000. So when we invest in a group, maybe we can invest up to about 3 or 4 will come together. We have about 600 or 800,000 investing in one deal, right? That's what we do.
Okay, thank you so much, Mr. Loh. I think our time is up. It's currently 5 p.m. So do you have any last advice for the floor of audience who wants to be investor or who wants to invest like you?
I guess I would like to look at the reason why we invest in startup, right? There are many reasons why we invest in startup. Some are for monetary reason. Some are for altruistic reason that you want to, share your experience. You want to give back to society. So I think we do see a lot of reason to invest, right? The world is changing, and we can be part of the change by investing in the early startup. And I think if you feel that, you invest for your own altruistic reason, or you want to actually make a monetary gain, I think it is something that you should experiment. And then if you feel that this is something that you are comfortable with, then slowly you can probably increase your amount of investment. I think equity crowdfunding is also a good way for you to experiment, right? You will start going into equity crowdfunding as a retail investor. You invest, and then you feel that, oh, that's good, right? I have good returns, so probably I want to go a bit deeper. Then you probably can start becoming an angel investor. That's what I think, right? This can be an evolution as an investor.
All right. Thank you so much, Mr. Loh. So for all the audience, if you want to rewatch this session, it's available on our pitchIN Facebook. Don't forget to like and follow, and I will see you guys soon. Thank you so much, Mr. Loh. Thank you, everyone.
Thank you, Kelly, for
bye. Have a
inviting
nice
me.
day.
Thank you. Bye-bye. Thank you.